Kovacevic, who recently released a book, My Electrician Drives a Porsche, and Willie, the editor of the Hat-Trick Letter. So to start off today, we'd like to start off with Rudy Fronk, the CEO and Chairman of Seabridge Gold. Rudy, it's a pleasure to have you back on GoldSeek Live.
Peter, glad to be here, and thank you for the invitation.
Great. Well, we're really excited to have you back today. Our last event was several months ago, and since then, quite a few things have happened, and one of those being a huge milestone for Seabridge Gold, and I want to congratulate you and your team on the federal permit there, as well as some other exciting news. So we look forward to getting updated. So if you could, at this time, start off with kind of giving us an update, and after that we have some questions from the audience, and if you do have any questions, please send those over and we'll try to get those answered.
Thanks, Peter. I assume that you can see my screen now on your screen. Hopefully the technology is doing what it's supposed to do.
Mm-hmm. Yes.
I have about 15 slides that I'll walk you through first. That'll probably take me about 15 minutes, and then I'm happy to take whatever questions come from the floor. During today's presentation, I will be making forward-looking statements, and I remind the audience that they can go read our forward-looking statement slide, which is available on our website. So the case for Seabridge. Seabridge is a company that right now has 45 million ounces of proven and probable gold reserves and 10 billion pounds of copper contained on 2 large projects, both situated in Canada. We have a very low share count, only 48 million shares outstanding. Low valuation. I know every gold company CEO would tell you that their stock is cheap right now. Ours is ridiculously cheap compared to peer group companies and what we've accomplished. We have low political risk in that all of our reserves are located in Canada. I think what's really exciting on a go-forward basis is the additions we're now seeing at both of our large projects in terms of new discoveries that are coming at significantly higher grades than our existing reserves, which obviously will have the impact to improve the project overall economics. In terms of gold reserves, at 45 million ounces, we're in the top 10 in the world among the large gold companies, with more gold reserves than Kinross, Yamana, and Agnico Eagle. One thing that we take very seriously at Seabridge is the concept of share dilution. I think as investors in junior gold mining stocks, the biggest risk we all face is the risk of equity dilution. I can't stress how important it is to keep the share count low and to make sure that when you do go out to the market and raise funds through equity dilution, that you actually can offset the dilution by adding ounces. One thing that we measure our success by at Seabridge is the concept of ounces of gold per common share. For 15 straight years now, we have increased the ounces on a per share basis, both in terms of resources and reserves. Nobody in the industry can say that, and we're very proud of the success we've had in terms of keeping our share count low while we continue to improve our shareholders' exposure to gold by growing the ounces on a per share basis. What I'm going to focus on in today's presentation is our flagship project, the KSM project, which is located in northern British Columbia. We started working on this project in 2006 when we discovered the Mitchell Zone. And since that time now, we've spent about $200 million defining what is the largest undeveloped gold-copper project in the world, and the only large undeveloped gold-copper project in the world that is now shovel-ready, in that we've received the environmental assessment approval in Canada, as well as the early-stage construction permits that are required to start building a mine. I'm going to walk you through 6 reasons why I believe KSM stands far above other undeveloped gold-copper projects in the world today. First is location. KSM is fortunate that it's situated near cheap power, near the existing road network in British Columbia, and pretty close to a port facility just to the south of the project in the town of Stewart. Over the past several years, the Government of Canada has now extended the power grid up Highway 37 and right past our project. The power that comes off this grid is sourced by hydropower. We can buy off the grid for about 5 cents per kilowatt hour, which is some of the cheapest power in the world. These large projects consume a lot of power, and in most cases, the large component of operating costs come from power costs. being able to buy off the grid for about 5 cents per kilowatt hour gives the project a huge benefit. Also, that we have an existing port facility, the town of Stewart, will allow us to bring supplies in on large ships and take concentrate out on large ships to smelters on the Pacific Rim on a year-round basis. Logistics are important in large projects. Second is jurisdiction. Over the past 5 or 10 years, we've seen a lot of challenges in jurisdictions that were previously thought to be pretty safe for developing large mines. We're seeing outright expropriation in places like Indonesia. We're seeing creeping expropriation in places like Ecuador and elsewhere, where we're seeing increased taxes and royalties. We're seeing local opposition to large projects because of environmental concerns in places like Chile and Peru. I've been in the business more than 30 years. I've operated on a global basis, and I can honestly tell you that, in my view, Canada is probably the best, the safest place to try and build a mine today. Community support is very important in developing these large projects. If you look around the world today, the Newmonts, the Barracks, and the other big companies around the world today are facing huge local opposition to projects of the scale of KSM. We've worked very closely with the local indigenous populations, First Nations and Treaty Nations, as well as the local towns. We have a signed benefit agreement with the Niska Nation, which is the only treaty nation we're dealing with at the project. And we also have public expressions of support from the 4 other First Nations in the area. We've also have the support of the town of Smithers, Terrace, and Stewart. This did not come cheaply or quickly. We've been working on community support since 2008 and really worked our tails off to get the support we now have. Project economics. Capital efficiency is something in this world that the big companies are looking at very closely. If you look at the large gold mining companies today, their all-in cost of production, including capital, sustaining capital, closure costs, and operating costs, are about $1,000 per ounce of gold produced. KSM, because of cheap power, long mine life, and large reserves, can boast a all-in sustaining cost of production of about $700 per ounce of gold produced over a 55-year mine life. So from a capital efficiency standpoint, KSM stacks up very well. And obviously, the benefits to Canada and British Columbia are also huge in terms of job creation, tax revenues, and other opportunities that will come about as a result of the KSM project. Number 5 deals with the exploration success we're now seeing at KSM. When we finished our pre-feasibility study in 2012, we turned our geologists loose to try and find additional zones of mineralization that could improve the overall economics of the project. In 2013, we did a large drilling program at an area called Deep Kerr, which is situated just underneath our open pit Kerr deposit, and came up with an initial resource of over 500 million tons at better than 0.5% copper and almost 0.4 grams gold per ton. This resource base now is 2.5 times our reserve grades that we see at the KSM project. If you look at the Deep Kerr on itself, it stacks up quite well with some of the larger, better known, developed gold-copper projects around the world in terms of size and grades. In 2014, we went in with another drilling program and extended Deep Kerr to the north, south, and at depth. Here's a map that shows the 4 areas we now have as reserves: Mitchell, Sulphurets, Kerr, and Iron Cap. And what we're focusing now on exploration is looking underneath our existing near-surface deposits for zones of higher grade underneath those deposits. Underneath the Kerr deposit, we've added a 500 million tons of resource. One of the nice things about Deep Kerr is that it can actually be mined in a very efficient block cave. The valley floor at KSM sits at about 500 meters, which will allow us to come in from underneath the deposit and develop a block cave going above us, which will lead to very low cost to develop the block cave compared to other block caves around the world. If you look at what we've added since 2000 and last year's resource estimate for Deep Kerr, we've extended to the north, to the south, and at depth. As a result of this, Deep Kerr will get a lot bigger than the 500 million tons we have. We will have our next resource estimate on Deep Kerr done sometime in March. And we also drilled in 2014 2014 a second zone called Lower Iron Cap Zone, which will add a sixth deposit to the project, which will come at better grades than our existing reserves. Advancing quickly, Peter touched on the environmental assessment approval we received in December from the federal government. This is a huge, huge positive addition for the project. Over the last 5 years in British Columbia, there's only been 2 projects that have received its environmental assessment approval from the British Columbia government and the federal government. KSM was the second one. In addition to the environmental assessment approval, we already have construction permits in hand we can start early construction activities on the project today if we wanted to in terms of roads, camps, and tunnels. We also will continue exploration work and engineering work to better improve the project by bringing in these new resources towards reserves over the next year as well. One thing that we are proud of is that over the past 10 years now, we clearly set out in our annual reports what we expect to do in the upcoming year, clearly defining our objectives, and then the next year's annual report, reporting against ourselves and how we did on those objectives. And I think if you go back and look at our history, we've done a pretty good job in terms of meeting objectives on an annual basis over the past 10 years. The approval by the government is huge, not only in the case of de-risking the project, but in the case of companies looking at coming in as a potential joint venture partner. Since the federal approval, we have more than doubled the number of large companies that are now looking at KSM as a joint venture opportunity. So what will drive value going forward? The exploration that we continue to do, adding new zones of higher grade, will have a positive impact on the overall project economics. We will have new resource estimates completed for Deep Kerr and an initial resource estimate completed for the Lower Iron Cap Zone by the end of Q1 of 2015. And then in 2015, we're also planning on another 20,000-meter drill program to continue to extend these higher grade zones and look for new ones. The biggest value driver going forward will be the successful completion of a joint venture with a major partner. We now have the most companies we've ever had involved in a data room process and a joint venture process. We believe that over the next 12 months, if market conditions continue to improve in the gold space and perhaps in the copper space, that we will be able to obtain a joint venture partner. Our goal in a joint venture will be to maintain as large of an equity interest in the project as we can while minimizing whatever capital contribution we have to come up with ourselves to develop this project. In terms of corporate information, we trade on the New York Stock Exchange, on the Toronto Stock Exchange, probably 10-to-1 volume, New York to Canada. We are part of the GDXJ. Low share count, 48 million shares outstanding. No debt. Working capital starting this year at about $15 million. I think one of the other things that sets us apart from other companies is the strong insider ownership that we have. Over 30% of our shares are held by insiders. I don't think you can find another junior company out there that boasts such a strong inside ownership for their company. With that, Peter, I think that's my 15 minutes. I'd be happy to open it up for questions.
Thank you, Rudy. As an investor in this gold, silver, junior space and mid-tier space and so on, it's always difficult to find a company with good share structure, insider ownership as well, and such leverage to the gold price and gold resources. So it's amazing to see after all these years to see such a strong share structure still in place, and I think that's a good testament to management holding interest in companies they're involved with, and understanding what investors are looking for. And we have a couple of questions that have just come in, and I'll start off with one from Mr. Wolf from Germany. He's asking about your mine plan, and he's asking, Seabridge would like to exploit the Kerr deposit as an open pit, whereas Deep Kerr deposits operate as an underground block cave mine. And he's asking, these two deposits, which are obviously the same mineralized body, have to be separated by a buffer zone of 50 meters. So he's just wondering, this 50-meter wide zone could add a significant amount of ore if Kerr and Deep Kerr were mined in a single block cave operation, increasing the overall resource. Could you give us any information about mining these two ore bodies as a single operation? Is that possible?
Yeah, it is possible. Right now, the mine plan involves Kerr mined as an open pit, which brings about other challenges in that there's over 600 million tons of waste that would have to be stored, mined and stored from the open pit Kerr deposit. One of the beauties about the block cave is that it will eliminate the open pit at Kerr. We will extract everything from underground, including whatever goes up to the surface. So a lot of the material we already have on the surface in the open pit will actually be drawn down in the block cave. So there won't have to be a buffer zone between the two. And it'll lead to much lower mining costs because of unit costs for a block cave for the scale we're looking at Deep Kerr will be about $5 operating costs per ton compared to open pit at a 3-to-1 strip ratio of above $5 per ton, and then not having to store the waste that we will not have now as the open pit. So from a mining perspective, right now open pit Kerr gets mined starting in year 30-something. There's no doubt in our mind that because of the better grades we're seeing at Deep Kerr, that Deep Kerr will be moved up substantially in the mine sequencing, which will have an overall positive impact on the project and will still allow us to get most of the material that's contained in the open pit still in the block cave.
Fantastic. And here's also just a follow-up question regarding Deep Kerr. He's wondering about the eastern counterpart of Deep Kerr, about work there, and also about the you talked about the camp zone and focusing, maybe drilling that out. Is that still kind of a priority to look at the camp zone?
The camp zone is not a priority at this point in time. We did put some holes down there a few years ago. We were looking for the epithermal higher grade zones that are situated next door at the Pretium's ground. We think that opportunity still exists at KSM. However, our focus has been to find the type of deposits that the major mining companies want to mine, build and mine, which is not a small underground higher grade zone.
Mm-hmm. Fantastic. And for those that may not understand it, that you actually have your camp on this discovery zone called the camp zone, right?
That is correct. We have about a 60-man camp there now. Where when we drilled that, the drills were right next to our sleeping quarters.
Gold and copper all around. The next question is about the permitting. Was that the last of the permits then? Was that the final one they're asking, or do you need additional permits?
Well, there's about 150 permits that are required before you can actually start producing gold, and they're typically done sequentially. As we went through the environmental assessment process, we decided to go in and go after the early stage construction permits that would be needed, so when a project comes in, if they want to start building now, they can. The other permits will come in as final feasibility is done on other areas of the project. But clearly the biggest hurdle in these big projects is always to get the initial approval from the government so construction can begin, and we now have those in hand.
Fantastic. And I think it's hard to really appreciate the efforts and time that your team have put into getting the provincial and the federal permits, and that process started back several years ago. Is that correct? Back in 07, 08, or?
Yeah, it actually started in 2008 when we filed the project description document with the regulators. After that was filed, we then spent the next almost 7 years working with the regulators, both provincial and federal. We invited in the U.S. regulators because there are some cross-border issues dealing with water management. They were part of the review process, and also the First Nations, the Treaty Nation, and their consultants. Since 2008, we had over 30 working group sessions with the regulators, with the First Nations, with the Treaty Nations. We made a number of design changes during that time period based on pushback and feedback we were getting from the counterparts in the project. And finally, in 2012, we felt comfortable that the designs we now had in place would get approved. Now, a lot of that time was obviously just to get everybody comfortable with the project and making sure that what we're submitting is the right project design. Then once we submitted that in 2012. It then took us to the end of 2014 to finally get all the approvals, both provincially and federally.
Wow, fantastic.
Yeah, what I do say is that the environmental assessment process works in Canada, but it takes a long time and it's very, very expensive.
Mm-hmm. Fantastic. We have a question from Judith. She's asking about senior mining companies are obviously in a big troublesome spot with the reserves, gold reserves. They're blowing through it and they're not adding to it fast enough, and especially in this environment, exploration and discovery work has been kind of put aside to save on costs. So why wouldn't are these? It seems like it's kind of a logical thing for a large gold company to come in, and it would be an easy way to double their reserves or quickly add to their gold holdings. Is I guess the question is, how does this play out in the coming years with these senior gold producers? They're kind of in a tight spot here with their reserves and resources.
No question about that. And they're also in a tight spot with a lot of their, the projects they thought that were going to be projects they developed. They're in some very tough jurisdictions right now. There's no question that the big companies go after projects like KSM, but they tend to go after them when the wind is at their back, not in their face. And for the past 3 years, the big gold companies have been challenged. If we see a major positive upward move in the gold price, there's no doubt in our mind that the gold companies will be salivating to take a project on like KSM. But we're not just relying on the gold companies. The addition of Deep Kerr with the high-grade copper has now brought in the largest base metal miners in the world to look at KSM. We now have more base metal miners looking at KSM than we do gold mining companies. And obviously the big base metal companies are much stronger in terms of balance sheet and the ability to transact on a project the scale of KSM. KSM is larger than anything that Newmont, Barrick, or Goldcorp have ever built. Wow. It's big.
It is quite the reserves there. It's a multi-generational mine, and we have a question regarding Royal Gold's interest in the company. Could you give some insight into Royal Gold's?
Royal Gold actually provided a lot of capital that we used to advance the project. They wanted a royalty in the project, but obviously because it was not far yet advanced, they were not going to pay a fair price for that royalty. So we entered into a very creative deal structure with them, where they basically invested $48 million in Seabridge in 2 tranches, an average price of about $24 a share for about 2 million shares. They paid a 15% premium to the market at the time to acquire those shares. And for that investment in Seabridge, they now have an option to buy a 2% NSR at KSM on the gold and the silver, not the copper or the molybdenum. And to exercise that option, they would have to pay Seabridge $160 million in cash.
Fantastic. Well, we're going to wrap things up here. Looks like we've got some pretty nice weather up in British Columbia this winter. Is that going to lead to an earlier start? When does the drilling exploration season kick off for Seabridge?
We typically go in and open up the camps by mid-May, and then usually have the drills turning by early June.
Okay, fantastic. Well, Rudy, thank you very much for your time giving us an update. It's been a very exciting year for Seabridge. It's really advanced, and I think once we get this gold market and the mining stocks to get some more appreciation and love in the marketplace, it seems like we might have turned a corner here at the start of the year. It seems like you're in a very good position now and to capitalize on that and attract some more investment to the company. So congratulations again on your progress this last year, and thank you for your time today.
Peter, glad to participate today. Thank you.
Thank you. All right, at this time, we'd like to move over and focus on the copper market more with Gianni. Gianni, are you on the line with us?
Greetings, Peter. Yes, I am.
Fantastic. Gianni, fantastic to have you on GoldSeek Live. This is our first interview on GoldSeek Live, but we did talk to you just recently in Vancouver at the Cambridge House Conference. And we do have your presentation now up on the screen.
You can see it.
So I guess I'll just hand it over to you at this point, and you can give us some background on your new book and on Copper Bank.
Yeah, so for those that don't know me, I've been a investor and a follower of copper for about 15 years, based out of Vancouver, but most of my time spent in Europe. And as I met people around the world, I would blog my thoughts on the copper market and copper in general. So after about 10 years of doing these blogs, I was suggested by a couple of friends to write a book to sort of cement that process. And as such, I wrote the book, My Electrician Drives a Porsche, which has very little to do with Porsches and very little to do with electricians, but it does articulate why the copper market is so important for the world. So what this book does is, if I just move to sort of highlight the center of the book here, is the animation working?
Yes.
Oh, perfect. So this book is a journey about a young electrician who enlightens his family doctor that the world has changed technologically and demographically. And as they go through these sort of colorful lessons, it's this younger sort of unbeknownst expert in energy and technology, an electrician that is, who is able to, through these colorful lessons, show the doctor and in turn anyone who reads the book just how profoundly our world truly has changed and what makes it possible. So the book is now on Amazon, and it will be through my distributors. It's coming soon everywhere books are sold, and that'll be North America wide. And the book is also translated to German, and we're going into Mandarin, so it's doing very well. I think I just wanted to maybe talk about a few things in the presentation. First of all, we're going to talk about copper, and I think a lot of people want to know what's going on in the copper market. So I've put up a chart here, a very, very recent chart, which is the price you can see in the navy blue line. As everyone knows, copper is trading around the $2.50 mark after, basically years it was trading range bound, over, $3 to $3.50, and all of a sudden you had this sort of a drop in the price of copper. And I think a lot of that has to do with oil just recently. If you look at a 10-year or 20-year chart correlating oil and copper, they're very tightly correlated, and even with the Canadian dollar, very tightly correlated. And of course, the Canadian dollar is synonymous with trading with the oil market. So when we see this price drop, it is something that I do not believe is sustainable. I don't think the price of copper is going to stay sort of in this low $2, mid to low $2 range for a long time. It would be the same as looking at the oil market. I don't see oil at $50 or $55 a barrel, 1 or 2 years out. It's just not a business at this price. And so if we look at the long-term correlation between copper and oil, if oil should rebound, copper surely should rebound with it. Over and above that, we have some of the supply and demand constraints, which I'll get into in a moment, which should exacerbate the price move to the upside in copper. And if we look at one of the main drivers of copper, of course, is China. And people are looking at China now with growth rates of around just over 7%, which to me, if you look at this chart on the left-hand side, is an economy. It is a over $10 trillion economy growing at better than 7%. So when you look back at 5 and 10 and 15 years ago, when it was a 4 or 5 or 6 trillion dollar market, growing at 10%, we're talking about a far greater base. And as Frank Holmes has just recently highlighted in his Frank talk, GDP on purchasing power parity, actually China has now surpassed the United States of America. And it's just this massive population. And these countries, also India and other countries of great populations, they're starting to flex the muscle of their population. And that's a trend that's just not going to stop, in my opinion. And on this next graph, we can see the balance between supply and demand in copper. Looking at the burgundy line there would be your supply growth, which should logically follow reliable demand. Now, demand is something that has grown between 3 and 5% on copper for over 100 years. So I'm going to suggest to people that that is a very reliable statistic, you know, and it should continue to grow. And I think it could be exacerbated to the upside. Remember the long-term trend, 3 to 5%. I don't see the implausibility of, you know, copper consumption growing by 4 or 5% in the coming years, but it's the supply that's going to have a very hard time keeping up. And basically, it's the, you know, the umbilical cord of human progress is energy. You know, I don't think anyone denies that. And you know, we're left in a situation where you have people that believe in basic progress, and then you have the uber greens on the other side. Well, copper's a beneficiary of both of these equations, you know. And so what we preach in the book, I shouldn't use the word preach, but sort of try to articulate, is the reality of being a realistic environmentalist. And what does that mean? And that means that, you know, accepting that, you know, more people will consume more things, and that there's no army, no government, and no spiritual force that can prevent that from taking place. And so if we can all agree that energy is the umbilical cord of human progress, this is a very profound statement. Oil is energy. Energy without fossil fuels is electricity, and electricity needs copper, and that's science. This cannot be changed. And so what is often forgotten by people, again, on both parts of this equation, whether they're industrialists or environmentalists, is this reality. The greener and cleaner that we create and utilize energy, the more that is demanded of copper. And, you know, have people forgotten about that? And so it's important to understand that and respect that, and look at, you know, concrete examples of how that takes place. One way to look at it is from conventional energy creation. So for a capacity of megawatt that we create, conventional energy takes about a ton of copper, rule of thumb, for each megawatt. When you get into wind and solar, you know, it's around 5 tons of copper per megawatt. Offshore wind is 10 tons of copper, you know, so there is a magnitude more copper required. And so could it be that we see, you know, in the future where people actually champion copper mining? Could it be that the greatest environmentalists in the world are copper miners? Maybe. They provide the very product that makes, you know, green energy possible. And so if people want to go away from fossil fuels slowly but surely, we're going to need more copper, and it's just a scientific fact. Another one of the you know, examples I like to that I think leaves a lasting impact for people is within transportation and cars. So cars use around 10% of primary copper production for all vehicles, and if we look at it, in 2014, 84 million vehicles were manufactured and sold. The question is, when will electric cars have a meaningful footprint in the car market? Now that we have like the Tesla and various other, you know, bona fide electrical vehicles, the question is, when will they be a significant percent of car sales? And we're starting to get those forecasts. Cost parity between an internal combustion engine and an electric car should take place around 2019-2020. So if you look at the graph that I've put here, so even though electric cars are a meaningful component already, estimates are now that around 10% of car sales will be, you know, EVs, electric cars, by 2019-2020, and around 2025 we should see 25%. So we need to start articulating what that means for copper. And if we look at the 10% number, which I think is more conservative, when we get to around 10% of electric cars, we're going to require 1 million tons more copper per annum, you know, which is a major number. So we look here in the chart that in 2013, world vehicle copper consumption was 2.15 million tons. You know, 1 million tons more just to get to the 10% mark, you know, it's a meaningful number. So I like to articulate to people, what does 1 million tons mean? So if we follow the red circle here, the world's largest copper mine, Escondida in Chile, produced just over 1 million tons. You know, so and it's an outlier. It's by far the largest copper mine in the world. So if you look at some of the other large copper mines in the world here on this graph, we need to build 2 or 3, very large copper mines just to satisfy the new demand that's going to come from electric cars. Right? It's going to be very difficult to make that happen. This is a chart done by Rio Tinto, and if you look at the gold line, it basically is showing 3% demand growth for copper. And because there's very little confidence to finance new copper mines, you can see on the graph around 2016, 2017, supply is just not going to be there to meet demand. So there has to be an incentive to build new copper mines. And if you look at this graph, between now and 2025, we're going to need an additional 8 million tons of new capacity. The prognosticators have consistently been wrong. You can see that even 8 years in a row, the numbers have not come in as planned, and even last year there was a 700,000 ton delta between the early 24 estimate and the later in 2014 actualities. So, people have said that there needs to be an audit on these prognosticators' numbers, and so that's finally been done. You can see here on a graph that I've taken from Glencore, who in my opinion, are some of the smartest guys in the copper business. For those that are not familiar with Glencore, they're one of the largest copper miners in the world, but they are by far the largest transactors in the copper market. Over 50% of internationally traded copper is done through Glencore. So I would say they're more on the pulse than anyone else. So what they've done on this slide is they did an audit on these prognosticators' numbers. So they went to each country that's a significant producer of copper, and they look at it through their lens, how they see the market coming. And you can see that 1.8 million tons they don't see coming online like some of these prognosticators feel. And remember, they own these mines. They control the copper, the product coming out of these mines. So, they do not see a supply glut, which is otherwise very polarized in the analytical world in the copper markets. So it gets back to this 8 million tons and who's going to finance it. We know that the major copper producers of the world they've already told the market that it's just not there. After 2017, 2018, if the incentive isn't there, they're just not building it. And so the sobering reality, if you look at this slide, is unless we have copper for around $4, $4.50, $5 for a while, they're just not going to build any new copper mines. I mean, who even if it's not the will, it's the money. Who has the ability to finance this stuff? So if you look at this chart, which is our contemporary price, you need to have a sharp rebound in the copper price, which I think we will have, not the least of which is, the oil price, which should rebound in the next 12 to 24 months, in my opinion. You should see, we have a strengthening U.S. economy. I think China will be steady, and then technology. Technology requires a magnitude more copper, be it green energy or otherwise. So people ask me, what am I doing about this? If I see 2015 is sort of a nervous copper market, but going into 2016, 2017, 2018, what am I doing about it? And the answer to that, I wanted leverage. I want massive optionality on a per pound basis, because this is something that's worked before. Seabridge was just on, and they were a consolidator of gold projects when they were totally out of favor. That stock is better than 20x performed since the early part of that company. And then a better example perhaps for copper is what Lumina Copper did. In the early 2000s, they consolidated various copper projects. And if we look on this graph here, when they were buying these projects in a very depressed copper market, they collected assets that were at the time non-economic, and then as the copper price rebounded, they spun out all these assets and they made 80x for their investors. This is a true sort of a transactional depository of copper projects. So to answer the question what I'm doing, I'm basically created a company called Copper Bank, which is just that. It is if we look at the next slide, it is a transactional depository of established copper projects. And we like investing in copper projects. We just did not have any companies that we could invest in. We did not feel confident that the Band-Aid financings that are happening with the junior companies have any accretive value for shareholders. So we've created Copper Bank, which through the pictorial, it's geared for maximum optionality to copper prices on a per pound basis. So a small move in copper prices in the future should have a disproportionate appreciation per share with Copperbank. And so we look at this metric, and this company IPO'd 2 months ago or 3 months ago, and you can see where our metric is. We are trading at less than 1/5 of 1 penny per pound in the ground for all categories. I will caution people to the number there. We have detailed tables in our presentation that articulate where those 3.4 billion pounds are. They're reserves, resources, inferred, measured, and indicated, so that people should be cognizant of that. But you can see that we are almost by far the cheapest copper company out there, and that is what we purchased these assets for. So if you look at our IPO share price, which was done at 10 cents a share, currently trading around 5 or 6 cents, and that's mostly out of since the IPO, we're basically buying out perhaps a lot of tired shareholders that have been with the previous companies that we bought, which were trading for 10 and 20 years. So the company currently has 130 million shares out at 5 cents a share, as a market cap of around $6 or $7 million. We raised our capital at 10 cents a share with a 50-cent full warrant, good for 5 years. So I think that demonstrates where the future value, where we see the value of the company. A strong management team, which I'm not going to get into too much detail. People can do that on their own time, but we are a group of engineers, geologists, and market professionals, and our projects are located places where, as we like to say, where we'd be happy to send our children to go work. So we have a project in Nevada and 2 in Alaska. So I'll just highlight our Nevada project, which is in northeast Nevada. This is an engineered project. It's at the PFS level. People can see the in the blue circle is where our current reserves and resources are, and we do still have blue sky potential just to the west of the deposit here, with a couple other prospective areas. 283,000 feet has been drilled. Just to duplicate the drilling alone would cost some $20 million Canadian. So what we did is, and what we're doing is buying research for stronger markets at pennies on the dollar. We bought this project for what's in the red circle here. This project is engineered. We have an MPV calculation on the project, and we see a market where $3.50 or $4 copper, and what the MPV calculation would be on contact. And people can look at this more in detail, but you can quickly see that with a $5 or $6 million market cap, it's a sharp discount to the net present value here at contact. A reserve table. And then I'll just quickly highlight our other project, which is Pyramid, located on the Aleutian Islands in Alaska, near Tidewater, and in a community of which is a native corporation, privately owned land. So we do not have the sensitivities that are present at Pebble. And we have 2 projects here, Pyramid in San Diego. Pyramid is a project that was drilled off by Antofagasta in 2011 and 2012. People can see we have an inferred resource here, and the duplication of this work would cost around $8 million. So yet again, buying research at a discount. Very prospective. This project is still open almost in every direction, and it's something that in a better market we would look to joint venture this project, or perhaps do some additional drilling. But for now, it's a hold. Paid $2 million for this project, and we are very happy to have it in our stable of companies. So just to reiterate, our low burn rate business model, we don't have an office, we don't have a big staff burn rate, and we do have an owner-operator culture. We're very mindful of non-accretive dilution. So like the presenter before me, I think when you have a disproportionate amount of ownership within management and insiders, we only see doing deals in a very accretive manner. And of course, we offer value on a per pound basis, and if you look at that table of where we are with our peers, it's one of the cheapest copper companies at IPO on the market. And we were able to raise capital. We did enough capital that could give us a 2-year runway, which was $1.6 million at IPO, and we don't need to go to market until basically the middle of 2016. And at that point, it's only around $250,000 to keep all our projects in good standing. And of course, our team is from a well-known group. forward-looking statement on some of the things I said. People should read this very carefully. And of course, I'm always available to mainly talk about the book and some of the public speaking that I do. And of course, with what is a company that I'm a founder and very proud to be associated with, Copper Bank.
Fantastic, Gianni. I didn't realize how extensively the Copper Bank, your company here, has progressed. It's quite exciting. We don't have that much time right now. We've got a couple questions. I'll just shoot that over to you right now before we finish up here. First question from Mark. He's wondering about the current copper price, if the Chinese deleveraging is causing it, and I think he's referring to this financing scheme over in China where you hold copper and use it as collateral. Is that an influence right now in the market? Kind of.
Yeah, I think the question is about namely Qingdao and what's taken place. So I've put up another chart here. You can see that the gray area is what would be this sort of so-called unreported stocks. What you can notice is that for many people in China, copper is money, and you can see that it doesn't really change, even though the Western inventories have been decimated, which is one of the reasons with the decrease in scrap was an import of copper into China. You can see there the 700,000 tons comes there, but the unreported stocks, albeit there could be a little bit of sensitivity and pressure there, but I think for the most part, this is the unreported stocks they're still there. So those are the numbers. So I don't have too much concern about an overwhelming wave of copper inventory coming due to that. And another thing is that Qingdao was more of an aluminum issue than it was a copper issue. I don't know if people are aware of that. But.
Okay. Thank you for that. And the next question is about investing in the copper itself. Is there a copper ETF? Is there an index of copper stocks?
Well, there was a couple of these funds that we're trying to get started, and I'm actually not aware of where they got to on those. But that's one way you can look at why we created Copper Bank, because it is a proxy on pounds in the ground. So, which I would think offers a lot more optionality with, or a lot more torque per share. You can just do the basic arithmetic yourself, but with our all-in reserves and resources, I've already said that it's trading at less than 1/5 of 1 penny per pound in the ground. So people can do their own calculation on that. But that's another way that people can play it on a almost like a quasi ETF. That's what Copper Bank is meant to be.
Fantastic. Well, it's a very compelling case of copper long term. Obviously, a lot of metals are not being replenished, and there's going to be some major supply issues. It's very interesting to get these insights, Gianni. I have a copy of your book here. Looking forward to reading it. And again, you said the book is available in bookstores. Amazon.com is probably the easiest place to access it.
It's on Amazon now, and if people live anywhere in North America, it'll be coming to a bookstore near you. And but it's on Kindle and Amazon right now. People can just search it up there.
Fantastic. Thank you, Gianni. Appreciate the overview and insights into copper. We'll look forward to having you back and giving us an update here. And again, just to kind of wrap it up, the contact, your best contact information to get more information on Copper Bank, was that copperbank.com?
Yeah, copperbankcorp.com.
Okay.
That's correct.
Great. Thank you very much, Gianni.
Thanks, Peter.
All right. Talk to you soon. At this time, I'd like to go ahead and move over to Jim Willie. Jim, are you on the line with us?
Yes, I am.
Fantastic. I am not sure if you want to use any slides, or if you want to just hand it over presentation.
Well, I don't have any slides prepared, but my usual pattern is if something comes up and you give me a few seconds, I can easily produce one, and I've got a great many of them at my fingertips. So
okay.
That's not a real big challenge, and I've got organized folders of charts and various things. So I don't want to show what I'm working on this very second, because I'm working on my paid hat-trick letter report So what I will do is minimize that, since I probably will bring up some information in the future here,
Okay.
in the next several minutes. Okay, I'm ready to roll here. I'm showing the, I'm going to show my screen. So I'm showing the same final copper graphic that your previous panelist had up there, and it's very impressive. And it's not just gold and silver that are being adversely affected by artificially low suppressed prices. Gosh, every week or two we hear another story of a major gold mining firm that shuts down, mothballs, or delays big projects. So when we get further down the road here, Peter, we're going to see a massive shortage of copper, silver, gold, and more, precisely at the time when demand is maybe going to start increasing as a hedge against a wrecked system.
And it seems like we've turned a corner. Some major events have happened, especially since our last event. We were speaking several months ago. But maybe to kick off here, we could talk about the big Swiss move, this SMB move about a month ago. Was this a monetary shot heard around the world? Did the Swiss kick something off here?
Sure. This is a story that you could probably base an entire hour interview on, but clearly we're not. They set themselves up, I think it was somewhere around September of 2011. They were seeing big moves out of the euro into the Swiss franc, money coming out of all kinds of member nations in the EMU, sharing the common euro. I'm not talking about just Germany, but money seeking safe haven out of Spain and Italy, and maybe even Greece to some extent. Just where can it go and remain in Europe? But it went to the Swiss hills, the Swiss banks. So they defended themselves by that I mean they defended against a fast rising Swiss franc by putting on a 120 peg, which means the Swiss franc, often called the Swissy, with initials of CHF. That's what you see on license plates for cars. CHF, no, I'm sorry, CH is used on cars. CHF is used for the Swiss franc currency. But they wanted to stop the Swiss franc from rising much more than 120. It was up to 125 and I think close to 130 at the time. I don't have the exact figure in front of me. But it went fast back down to 120 and became catatonic for 3 years. All right, well, I put out my feeler because I did a story in the Hattrick Letter in late 2013, about a year and a half ago, not quite. They had about 400 billion euros. Okay, if you want to prevent the Swiss franc from going up, you take in the euros that are coming into the country and you make sure that they don't get exchanged for your Swiss franc. So they're collecting these euros. I put out feelers a few weeks ago when the story broke of the fractured peg, the removed peg. How many euros did the Swiss National Bank have? That's the name of their central bank. And the answer I got back from some London sources was 800 billion euros. Okay, so the first issue, Peter, is, do you think they're done? No, that was round one. They're going to continue. Either they are planning to do a steady stream of significant euro dumping on the market, or else they're going to have to do 3 or 4 or 5 rounds. Now, my guess is that they're going to lie through their teeth the entire time because they don't want to see the euro bid down by other players and the economies and corporate, treasury holders, holding their cash, they don't want to see the euro go down when they have more to dump. So they're going to say, or hint that they're done, or they're going to say, we're taking measures to fix the Swiss economy, and we're reducing staff in banks and financial firms. We're going to reduce salary, do all the prudent things to make sure that there's no abandonment. This is going to get very, very ugly. All right, here's what I think happened in Switzerland. I hope I get this right. I'm looking at some notes. They were shorting gold. Okay. It wasn't widely known that their 120 euro peg in Switzerland was built on the back of shorting gold. But it seems that the evidence is out that they were shorting gold and going long the dollar. So they were buying the dollar and buying treasury bonds, knowing that QE was in force. So on the one side, their long dollar was not at risk because the Fed is the backstop. On the other side was the short gold, and notice that the 1800, 1900 peak for gold was precisely at the moment before the Swiss put on their peg. So we can blame the Swiss for dumping the gold, but it's deeper than that. In the last several months, I believe the Swiss were caught in a trap. They were using, this is my conjecture, this is my, I don't know what you want to call it, my colleagues putting their heads together and making an analytic conclusion. There has some guessing and there's some conjecture, but borne out by the movement of markets. So it's not just a dumbass guess. We believe that the Swiss were leasing German gold. And just as a quick footnote, anyone who thinks that the New York Fed and London and Paris had all the German gold, the 330 tons, in the last 3 years, well, you're out to lunch. You're dumb. You're just off the mark. They own about 4,000 or 5,000 tons. So we're talking about less than 10% of the German gold, which means over 90% of the German gold was lying around, perhaps in the western hills of Germany, available possibly to lease. So did the Germans yank the Swiss toilet bowl flush? I think they did. I think they did.
And do you think they did this independently as they're portraying, or was this a coordinated, expected, and did other central bankers already know? I mean, they meet once a month in north of Zurich there and conspire on the next central bank move. So was this just part of the plan, or did they act independently?
I think the Germans pulled their flush, their plunger on the toilet flush. So, but I think at the same time, the Swiss got word of details on the Draghi Euro Central Bank details for the QE. Mm-hmm. And I don't really care or believe whether Draghi is going to follow through on whether it be sterilized or not. The United States, U.S. Fed does the unsterilized. They just inject money and buy bonds, and hell or high water. The last thing the U.S. wants to do is remove funds from the banking industry when it doesn't have proper liquidity to begin with. So the Germans yanked the cord for the Swiss, while the Swiss and the Germans realized that the Draghi central bank was about to engage in QE and probably lie about sterilization. So the Germans might have been motivated not just to, oh gosh, how should I say, stick a knife in the rib cage of the U.S. Department of Treasury in vengeance for the Ukraine war and the damage to the sanctions and the spying in the NSA. But it was probably worse than that. My guess is the Germans want to kick out a leg from the King Dollar's throne. And what are those legs? Let's see if I can get the four. It's the Forex currencies, it's the Treasury bonds, it's the derivatives, and it's the SWIFT bank rulemaking, which enables them to do sanctions. So the Germans are sick of the U.S. hegemony on the financial side. So I think that's what happened. It could also be the Swiss were told by the Bank for International Settlements, which is in Basel, Switzerland, that there's not going to be much more gold to lease. The BIS is a big leasing agent. So is the Vatican. London, not anymore. They're drained. I think the U.S. with New York and London, I think the two Anglo-Americans are drained, which means that their power is gone and they're not going to be major players in the next chapter. If they're lucky, those two nations can avoid the third world. I think the Swiss central bank action, Peter, opened the gates of hell for Europe, the U.S. dollar, and for gold in a positive way.
Well, this is all playing into a much bigger picture, and this covers some of the questions we've been receiving about what's happening geopolitically. So let's kind of, I guess, step back and look what's going on between the West, the U.S. And Russia. Obviously, I think most of us can agree that when we listen to mainstream media now, we're just getting a bunch of propaganda about what's going on there. But the Ukraine is just it's kind of a subset of a bigger power play, and it's causing, like you're saying, this rift between like Germany and other countries. And you're saying you believe that Germany is being courted by the Russians, and they're sick of kind of being a colony of the United States.
Yes, very much. They're also sick of being an occupied nation. We don't think in those terms. We think, oh, whoa, there's some NATO air bases for the U.S. military on German soil. Well, they don't see it that way. They might think, oh, well, you know, in Ramstein we got some economic support from all the soldiers that are here and spend money. It's not that simple. They don't want the U.S. military on their soil any more than the Saudis do on their soil. You know, there's one thing, one little detail. I know that pardon me, the webinar, pardon me, the webinar folks are looking at my notes here because I have my screen on. I don't mind that a bit. There's something I left out. There's a lot of profit that was made for the Swiss depeg decision, much like there was for 9/11. These big banks are lined up. Do you think maybe some big Swiss banks were long the Swiss franc, short the euro, and increased their positions and maybe even covered their shorts for gold right before the decision? And when you see the gold price backing off in the last week or so or more, could that be that they exited some of their positions that were, you know, marginal? Okay, they're extra positions that were short, now they covered, now they're out. Okay, there's another piece to this puzzle. Langley, I was told, had several $1 billion worth of Swiss francs in shrink-wrapped bills loaded on pallets, delivered by trucks, you know, the mini forklifts, and they were owned by Langley in perhaps 24 Swiss mansions. Now just think of a Swiss mansion as not having a 2-car garage, like maybe a 4-car garage with an extra servant quarter garage. So they all got loaded up with pallets. I mean, like, you know, neck high. I mean, like, you know, 6 feet long and 4 feet deep, neck high, of shrink-wrapped Swiss francs. Okay, Langley, I don't even want to get into where Langley got the money to buy the Swiss francs. It could be from counterfeit $100 bills, or it could be from narcotics money. I don't know. I don't care. The point is that other people knew something was coming up. I reported on the shrink-wrapped billions of Swiss francs by Langley in the mansions of Switzerland. I reported that 18 months ago. So this is not new. As for Ukraine, that's another one. Gosh, Peter, you could spend an entire hour on that. I like pointing out the major motives for Ukraine. And would you mind my getting to that?
No, I think it's very important because I think there's a very big misconception of what's going on, and I think that would be great to get some insights.
Okay, I'm not operating by notes, but you know how it is after you live and breathe this stuff for a few weeks or a couple months and start writing articles or other documents or research notes to your fellow colleagues, it gets really imprinted in the brain, and some of the points come out without even thinking about the words. The obvious, it has nothing to do with Russian movement into Crimea. I mean, gosh, Russian movement into Crimea. Gosh, is that ever stupid or what? No, the Russians and the Chinese wanted to stop, along with the BRICS nations, usage of the U.S. dollar in trade.
Mm-hmm.
They wanted to stop usage of treasury bonds in their banking systems. Those are the two sides of the same currency. I mean, the dollar is the ink, but the treasury bond is the vehicle that pays interest and is the instrument used in trade or sitting in the banking systems as toxic paper. Okay, so the crime for Russia is that not only did they boot out the Rothschild bankers, they wanted to stop U.S. dollar trade settlement. So they got the same treatment that Iran and Iraq got, a war. All right, there's more to this, much, much more. There's another obvious. Let's cut off, Washington thinks, let's cut off the pipeline umbilical of natural gas. But they can't cut off all the pipelines because the ones in the north are under German control. Nord Stream. There's one that goes under the North Sea and feeds LNG port facilities, the liquefied frozen natural gas, for German usage. A good portion, I don't have the figure in front of me, a good portion of German usage of Russian gas comes by means of LNG. So the U.S. thought, okay, we can cut off the marriage of the Eurasian trade zone of Europe and Russia. And Russia's already aligned with most of Asia. Well, I shouldn't say it. China and some of its neighbors. We still have Korea and Japan to jump aboard that trade zone. So the U.S. thought that they could cut off the, think of it as the blood supply, energy gas, that would serve to join at the hip Russia with Europe. And what's the leading nation in Europe? Germany. So they're very, very important flipping nation. This is game over when Germany announced they're going to work with closely with the BRICS nations and Russia and have a new gold currency. It'll be game over. All right, so what are the other motives? Well, I'd like to back up a little bit. In 2011, when the Germans first asked for their repatriation of gold, they were focusing on 330 tons sitting in New York and probably Paris and London as well, but let's just focus on New York. Why did Germany ask for their New York gold back? We don't ask that question much. In fact, I didn't. I just thought, okay, it looks like the Germans, this is 2011, pardon me, 2011. So they asked their gold back. Big deal. They asked for their gold back. It's their gold. They have the right to it. No, there's more to it. The U.S. State Department gave a briefing in the summer of 2011 to the German government on their plans for a Ukraine war. And the Germans thought, are you out of your minds? A week later, they asked for their gold back. Okay, so there's a lot of motive going on. There was the global currency reset, which my understanding was in November and December of 2013, right before February 14 launch date, for Ukraine. So 2 months before the Ukraine war, the U.S. was a signatory, along with over 100 nations, for a global currency reset. And it's a misnomer. It's not to reset the major currencies versus each other. It's to reduce the major currencies by a half versus gold and silver, and maybe 3 times for silver. So cut in half the gold price, cut in half the value of the major currencies versus gold, and cut in third the value of major currencies versus silver. So let's call it the misnomer, global currency reset. No, it was a return to the gold standard through the Forex ramps, and the U.S. reneged on the pact, made itself a global rogue nation instantly by triggering the Ukraine war and stealing immediately their 33 tons of gold. They call it for, put it in the New York Fed for safekeeping. The Ukrainians will never see it again, just like the Libyans will never see their 144 tons sitting in London. That's probably shipped to Asia, recast in different bars and serial numbers in the Swiss refineries. So what are the other motives for Ukraine? Well, to steal the gold, fine. Also, to go after rival oligarchs' $70 billion in money, the funds that's sitting in Swiss banks. The Swiss are culpable again, just like they were 80 years ago with a certain neighbor nation. Okay, what else is the Ukraine motive? Well, I think the U.S. and the cabal want to take ownership of the entire western Ukraine farmlands.
Mm-hmm.
They're already there. They're already instituting the Monsanto seeds and the GMO food supply. So if a major food source for Europe is Ukraine farmlands, did they not conquer the major source of food for Europe?
Yeah.
And instill their GMO seeds? I mean, for those who don't understand, GMO seeds does it does a lot of things, but 2 major things in my mind. The first is that it sets up virus delivery systems. It can alter your cell's nuclei across your entire body to make you susceptible, vulnerable, create these trigger devices, just like the Born Legacy movie 2 years ago. Okay, the second purpose of GMO seeds and foods is to cause sterility. In laboratory rats, just takes 2 or 3 generations, and then the next one is sterile. And Monsanto demands that you get all your seeds from them, because once you start in their seed program, your crops don't make any seeds. Sorry, I have to clear my throat. Get a little water.
No problem.
All right, so you have the Monsanto angle, and then you have another hidden motive, and you see that with Joseph Biden, the vice president's son. I think he's a worm.
Mm-hmm.
And he's involved with a company, pardon me, he's involved with a company along with Hillary Clinton. And they're taking up ownership of certain Western province gas deposit property. So you have a hidden motive all over the place. The last one I cite is for fracking. Fracking and gas production. The U.S. actually told Europe and the European Union, whose leaders are the unelected commissioners in Brussels. Continent was conquered. Unelected commissioners, just think about that. They have subordinates, the elected prime ministers and presidents from member nations. So the U.S. actually told these EU nations, we will make up the shortfall of your gas. You'll lose from the gas pipelines from Gazprom in Russia, And the U.S. has no such capability, nor a fleet of LNG ships. Ukraine is a disaster, and they just had a major news announcement from their central bank that they can no longer control the, how should I say, the descent of their currency, which is called the hryvnia, H-R-Y-V-N-I-A. The hryvnia is about to collapse.
Mm-hmm.
I made a forecast when the war started that when the harvest season came, we were likely to see a collapse of the regime. Actually, I made a first wrong forecast that this thing will last no more than 3 months, but I'm afraid that was jackass bravado, which I revised as by end of year, the harvest time, and now we're starting to see the effects of an actual regime collapse. And we're seeing it in strange ways, like requests for emergency meetings for a truce, offers for sharing transit fees on the pipeline, which would be resumed in flow. And now you're seeing Merkel from Germany and Hollande in France meeting with Putin from Russia to bring about some kind of a larger peace plan / trade union pact, which is a remarkable development that's getting no press coverage at all in the United States. What Merkel is essentially doing, Peter, is offering Russia that Germany join the Eurasian trade zone in return for honoring the Minsk truce agreement. Minsk is a city in Ukraine. And the United States wanted no part of the Minsk truce. In fact, right after the signing of the Minsk truce, U.S., through its proxies in the Kiev regime, brought about a bombing campaign in the eastern provinces of Ukraine. So that was their answer to the truce. And I ask people, really, do you really think the United States is about peace, liberty, commerce, trade, prosperity? I don't. So Merkel took the Davos conference as a forum and offered Russia the extension of the Eurasian trade zone into Germany. And I guarantee you, if Germany goes, so goes France, so goes Austria, so goes Netherlands, so goes perhaps at least one Scandinavian country, and all the little countries in Central Europe like Luxembourg and Liechtenstein, and I would venture to guess, based on the installation of a Chinese RMB trading hub in Zurich, that the Swiss would join it also. So those are my hidden motives, and it was interesting when I started the Hat-Trick Letter in '04. Within a year, I put on paper all the hidden motives for the Iraq War. I'm not going to list them, but I just want to make the point that when the U.S. enters a war, it's usually as a manifestation of financial threat. And the financial threat is discarding the dollar by Russia. I made a forecast right after the Ukraine war started that before too many more months, Russia's going to announce that all their energy trade will be done outside the dollar, probably in ruble and maybe it's some in euros, but ruble and Chinese RMB, the renminbi, that's kind of the nickname of their yuan. Mm-hmm. So the Russians made that announcement, I think, in around October or so, and then we had a remarkable event take place recently, and here I am going to try to produce a chart. This chart is, can you see the chart, Peter?
Yeah, it's coming through.
The sovereign net issue, this is what was on my computer at the time working on my report. What this means, this is extremely important, but I'm going to get to the chart on petrodollar abandonment. I'm going to take that note so I don't forget my own point. Okay, this chart is sovereign bond issuance on the net basis. What this chart means is since these four nations of Japan, England, Europe, and, well, Europe considered as a nation, and the United States, if you consider all of their issuance of bonds, sovereign bonds, and then back out all that's purchased by QE, the bond purchase through monetization, it's negative. Well, what it means is that the four nations are printing money and buying bonds in a volume that exceeds all the debt issuance for the four countries. How can that be? Well, because of rollover. Okay, if you have a matured 2-year Treasury bill, okay, they cover that too. So they're covering more than the debt issuance. They're covering the rollover. Okay, I'm going to bring up look at the date, sovereign bond debt issue. I'm looking for petrodollar. Okay. Oh, I think I hit all files. Oh, rats. Sovereign bond, total debt growth. I can't find it. I will move to my handy source here. Oh, rats. I'm struggling here to find my charts.
It's fun.
Okay, I think, no, that's not it. It's a petrodollar. Let me just search for petrodollar. Oh my gosh. The chart I didn't put in my report, and now I can't find it in my... Did I misname it? Petrodollar, look at that. Okay, it's under January. I had the wrong route. Okay. This is evidence that there's no more petrodollar. By that I mean countries that are exporting oil are not holding the dollars anymore that they receive. This is the exported capital. They don't hold any more treasury dollars, treasury bonds in USD terms. They're not holding them anymore.
What do they hold in return?
Oh, I don't know. Maybe they like Euro bonds. Maybe they're investing in Chinese government debt. Maybe they're buying a lot of gold. These are, okay, the nations are, well, continents, Latin America, Middle East, Asia, ex-Japan, and the Commonwealth of Independent States, which is former Soviet republics, plus Russia. Okay, so notice that the Middle East, in purple, in the last few years, has gone down, down, down. Notice 2011, okay, I'm going to just point. Notice 2011 here, 2012 here, in purple. The Arabs had a lot of, petrodollars that they were holding. They're not holding them anymore. They got very little here. They got a third or a quarter, maybe 20% of what they had just 3 or 4 years ago. Notice in orange, Latin America, there's almost nothing held in dollars anymore. So what are the producers? It's primarily Venezuela, which is having a great deal of difficulty. So as soon as they get revenue, they convert it. So the petrodollar is dying. The recycle has halted. They're not holding any more oil surpluses in dollars. So this is a very important point.
So in relationship then back to Russia, are they in de facto, it looks like they're taking in their dollars or euros and converting that into gold right now?
I think so. I think so. The Russians are doing a lot of things. They're doing very much the opposite of what we are told they're doing. The big lie out there is that the ruble is under such distress that they're taking all their gold held in reserve, and they're selling the gold bars in order to alleviate the problem in their economy from the ruble. No, they're not. They're converting all their energy dollars, the petrodollars, and they're buying gold, and they're also putting more money, defending their ruble, and putting it into their banking system. So if you take a look at the Western press and pull out a Russia story, I guarantee you it's 90% a lie.
It's the propaganda and the level of it, especially in the past months, it's almost childish of what they're trying to do.
Well, I hope it gets worse, Peter. I really do, because I want to see the U.S. press discredited. They're lying through their teeth.
Mm-hmm.
I'm just moving around here, looking at a couple other charts. I don't have anything special to show, but take a look at this chart here on the right chart. This one here, you see U.S.-based Chinese payments. They're just going up, up, up. So we're seeing a 327% increase just compared to not quite 2 years ago. I have a story in my February report that we have a new trend of the U.S. corporations, namely the retailers and others, but mainly the retailers. They're converting dollars into RMB in order to guarantee just import supply, the shipments. So we're seeing an abandonment of the dollar even in the United States. This is just astonishing what's going on.
There's lots happening, and would you say that this move in Ukraine, the U.S. empire kind of trying to take over Ukraine and control it, has that accelerated this process? Has that kind of pushed Russia, and China looks like that they're being more aggressive now?
Oh, they're not only being more aggressive out of desire, defending attacks, but they're more aggressive out of expedient. They must.
Mm-hmm.
They must accelerate their launch of a BRICS gold-backed currency. And there's some past evidence of that. The Belgian bulge, I called it. I wasn't the only one calling it that. But to see $420 billion in U.S. Treasuries sit in the Belgian central bank, I mean, that's just a size 22 big toe. They won't fit in a shoe. I mean, it's just an enormous outlier. And I was told that was evidence of the BRICS sending their treasury bonds into a warehouse that would be in safekeeping for conversion into the BRICS gold central bank. So this is just alarming. The chart that I have before you here, I mean, this is just a hodgepodge of things that I'm also adding on. It's the Federal Reserve being the biggest buyer of treasury bonds. There's really no other buyer of significance. And when you hear, okay, the Chinese bought some more treasury bonds, it wasn't because they had an urgent need. It's because they're doing a favor. They don't want the U.S. treasuries to collapse, so the Chinese will buy some. I don't think the Japanese are going to be buying much. The big story there was in November, the United States Treasury Department ordered them to hand over their $1.2 trillion pension fund for government workers. So looks like there's going to be some more conversion there of those pension funds into treasury bonds. It's really just a bunch of musical chairs moving around.
Mm-hmm.
At the same time, the Japanese announced that it's going to be unlimited QE. So the United States, the Fed, I call the U.S. Fed, but only because it's on U.S. soil, the U.S. Fed announced that they're going to halt QE, and then 1 week later the Japanese announced unlimited QE. I mean, you got to have a Bush-like 85 IQ not to put the two events together.
Yeah.
Unfortunately, I think about 2/3 of the American public has an IQ of 90 or less. And the ones who are above that, they tend to be hat-trick letter subscribers. That's my bad joke, Peter. We're getting very late in the game.
Yeah.
This is the end game, and I remember back very distinctly. It was early December, mid-December, and The Voice wrote a note to our gang of colleagues. We're a bunch of cooperative colleagues. We don't pay each other. We just share thoughts and analysis. There are about 9 or 10 of us, and a couple new entries in the last couple of years, London Paul and Euro Raj. Both of them are very brilliant guys, a lot of insight. But The Voice shared with us back then, about a couple months ago, this is the end game. We're in the end game, guys. This is it. And that's when I changed the nature of my hat-trick letter like I did after the Lehman Brothers event. After Lehman Brothers, I no longer had what I called a macroeconomic report that forecasted the collapse of the U.S. economy, its banks and housing market, because it just happened. So I changed it to the Global Money War report. Now what I'm doing is I'm sticking with the Global Money report, which has many aspects relating to gold, to be sure. Pardon me. Time for a swig of water. We are in the end game, Peter.
I believe it's very hard to deny things have changed. Things are moving very quickly now, and some major things have really triggered this, like you're saying, this next stage. And I'll let you go from there, keep talking, but we do have some questions about that, and want to.
Okay, why don't you get to the questions, unless you've got another major theme.
Well, it relates to how, Rob sent a question, is asking where should he be in 2 years from now. Where do you find safety in this world? I think he's talking more physically, and there's other questions talking about where do you keep your money? Which banks do you trust? Which countries? Where do you seek from potential capital controls to currency devaluations? Where do you hide? How do you maneuver yourself personally to protect yourself from the situation?
Well, let's talk about the country first. Where do you stand? Where should you be? Believe it or not, I get this question twice a week from clients, sometimes twice a day. And the answer I give is, favorite 2 countries that I have, apart from some of the recent problems from some influx of money and people, I mean, these are not static conditions. So if I make a suggestion of a country, 4 months later, things change. The first answer I give is Panama. There are 120,000 new people in Panama from Venezuela just since Chavez died. That's not a small number for a country like Panama with 2.5 million people. I believe they're going to reach 3 million before too many more months, maybe another year. So I don't know. But the funny thing is, Panama doesn't let them in unless they have money. They don't want the riffraff. They want. There's a requirement for a fast-track permanent residence, which skips the temporary residence. The fast track for permanent residence requires a $5,000 bank account. They're not stupid in Panama.
Well, it's a lot lower level than, say, in Canada, where they want millions of dollars to be fast-tracked.
Yeah, okay, well, you're right. And there are Caribbean nations where you have to have, like Kitts or some other nation, Bahamas. I hear Kitts requires something like $300,000 to $350,000 bank account and buy a house worth at least $200,000, or maybe it's $250,000. All right, to be sure. But, when you're talking about Central American influx, 5,000 is a prohibitive number for dollars, okay? Let's be very clear on that. I don't know a single Tico, a Costa Rican, with $5,000, okay? Not one. I got several friends, not a lot. Every single one of them is struggling. Not one of them has $5,000. So they couldn't move to Panama. Okay, the second country I mentioned is Chile, in particular North Chile. There's a place, I've got a client there, and if he's listening, you know, my hat's off to you for opening my eyes. He said, Jim, come on down there. I know you're a skier from Boston. Come on down to Iquique. That's I-Q-U-I-Q-U-E. It's in northern Chile. Chile is so vast a country that, you know, it has a 2,600-mile border on the Pacific. So think of it as north-south, 2,600 miles, but east-west, I'm not sure. It might be over 100 miles in some parts. But they got about 20 different skiing resorts. So on my list is to visit Mr. H and take up his offer of setting up a temporary office for a couple weeks in his nice apartment. I think he said he was on the 18th floor with a view. Yeah, you know, work by day and go out and have a nice dinner by night and stroll around and come back and repeat the next day, and then maybe on the weekend go rent some skis. I used to go to, I've been in Colorado many times, Peter. I used to like Copper Mountain.
Oh, yeah.
Who didn't do Breckenridge? But Breckenridge gets boring because it's kind of a family mountain, not very hard. Copper Mountain, I did Steamboat. I did Arapahoe. Arapahoe has some very tough sections, but I like Copper Mountain the most. Back in Boston, I used to zip up into western Maine in a place called Sunday River. I did that. I'm not exaggerating. I must have gone Sunday River at least 30 times. I went there, eventually I went there alone because by the time I got up there and settled into a bed and breakfast, my favorite one up there, I can't remember the name, but I settled into a B&B and I would meet a couple guys and they, hey, you guys are cool. Mind if I ski with you? Sure, come along. Are you any good? That's always a big question. They don't want to have their progress held up by a slow, amateurish skier. So anyway, I had a lot of fun. I would love to go to Chile. But back to the question, okay, there are not many countries. I still think Costa Rica is a great place. I'm here. There are other locations nearby. Nicaragua is actually quite a nice place if you can tolerate poverty. It's got a lot of great people. It's not a place to set up shop and start a business because you know, they're different regarding capitalism. Let me just put it that way. They're different regarding capitalism. But Panama is thriving. They just built an above-ground monorail. They just built an underground subway. They expect that the 18 months for the construction was well worth the effort and the inconvenience because their financial district is vast. I remember doing one particular, you know, I went down there I had to go every 90 days to be out of the country for 3 days to satisfy visa requirements. So I thought, hey, I'll go down and see the canal. Besides, I have a couple friends down there. I'll meet up with them and we'll have some fun. Go out for dinner, go out for walks, whatever. So I saw the canal, but I did an exercise one day, took a pad of paper, and I just wrote down the name of banks in Panama City. I had over 100, I think it was like 120. And then I went back and did some research. Where are these banks from? Well, a lot of them are from Colombia. I just, well, I hate to say it, but I think it's just, you know, narco money finding a good way to be put to use. But there were a lot of Portuguese and Spanish banks and Russian banks, French banks, Italian banks, Brazilian banks, a number of Brazilian banks that I had never heard of before, Uruguayan banks, a couple of Venezuelan banks, and then some very minor ones, you know, from Peru and Ecuador, but the biggest banks in some of those minor countries are from the banks, are banks from the bigger countries. So it was really quite an exercise. But as far as the economy goes, low taxes, safe environment, northern Chile is wonderful because they've got a big copper industry. Now, your previous guest went on to explain the power of copper, and I don't doubt it for a minute. I think copper is going to have a major rebound when the United States dollar is pushed off the table and the whole world can get back to the gold standard instead of paying the ferry keeper at the U.S.
Yeah.
These toll takers and ferry takers, they've got to go. I mean, I'm preaching to the choir here. You guys know this, but there are other countries that are perhaps wonderful. I think Ireland is going to have a nice rebound. They've got a lot of available labor that's seeking employment, skilled labor. They've got some, how should I say, Catholic underclass that's come from Eastern Europe that are causing some serious problems in Ireland regarding, say, narcotics and home break-ins. I don't want to mention any country, but you know, you can research and find the answer to the name of the country with 6 letters and starting with a P very easily. So there are other countries. I think Spain is going to have a rebound, but let me just point an oddball point here. It's out of left field, but you know, Russia did the counter-sanctions of banning all imports into Russia of European food supply and meat supply, farm output. Well, what it means, Peter, and all the listeners, is that the large agricultural businesses in Southern Europe are all at the risk of going bankrupt. And as they experience the late stages of distress, before bankruptcy and after bankruptcy, you're going to see the Chinese coming in and buying them up. And after the Chinese buy significant Euro agribusinesses, you're going to see 1/3 of the output from these farms and livestock ranches diverted to China very legally. So you're going to see food and meat shortages in Europe as a result of the U.S.-sponsored war in Ukraine. Teaming up with the U.S. is a prescription for economic ruin and shortages.
And they've pretty much, the IMF has come in and put Ukraine into total debt servitude and is controlling what their the politics and all that. It's all a puppet regime. It seems.
Well, it's worse than that. Of the $3.1 billion of emergency funds last May, 90% of it was stolen.
And the contingency I recall was that to receive the first tranche of this cash, this debt, they had to go on an offensive in eastern Ukraine. So
right, it's war funding.
Yeah.
So would the funds from the IMF go to rebuild the Ukraine economy, or would they go to destroy the western provinces where they're bombing civilian villages?
Yeah.
I mean, this is crazy. I'd like to point out 3 things regarding Ukraine that are really scummy. Let's see if I can get this right. Actually, there might be 4. Okay, there are 4. One is, they've had movies on this. This is not new. It's white women trafficking. Okay, that is not a significant, but it is an important niche industry in Ukraine. The banking for it is done in the Kiev banks. Okay, second one is drug trafficking. They have a competitor nearby in Chechnya.
Yeah.
They're a major transit point for Eastern European, Yugoslavian movement of heroin. Can you say Afghan heroin? U.S. sponsorship through old Yugoslav republics moving through Ukraine? Yeah. On their way to Europe? Yeah. Okay, so that's the second. The third is an unusual one that people don't link with Ukraine, but how many times have you, Peter, had a solicitation for aiding some Nigerian guy? If you just pony up $50,000, you can get $1 million back.
Yeah.
I'm up to about 30 or 40. How about you?
I'll constantly get emails about the gold dust and Nigerians. Yeah.
Right. All the Nigerian fraud is done. The banking is done in Ukraine banks.
Mm-hmm.
Okay, the last one, and this brings up a point of a story that came out in December, that in the forests outside of Kiev, they found 3,000 dead bodies, human bodies, cadavers. They tend to use the word cadavers when the organs are missing. Mm. Major organs, like the liver, the kidney, the heart, maybe even a lung. These are major important organ trafficking items, mm-hmm. the banking for which is done in Ukraine. So do they mind that there are more dead bodies in Ukraine? No. No. In fact, I've got a client. He's a friend and a client. He's in Switzerland. He contacts me every few months. We have a nice little conversation. He's a good guy. I've met him. I met him at the Munich conferences, the same location where I had the death threat from the U.S. Homeland Security. He said to me, Jim, I go by the Zurich airport on my way to work, and sometimes I just stop and take a look at what the markings are on the planes. And he said, I noticed that there is very often, like a few days per week, sometimes every day in a week, a Ukrainian marking on an airplane. And I said, well, how big are the airplanes? Are they commercial? And he said, no, they're not the commercial type. They're the, like the Gulfstream that seats 20. Mm-hmm. I said, well, what do you think they're moving? And he said, I don't know. Maybe they're moving families. I said, well, yeah. You think they're moving human organs? And he said, I don't know. I see them moving out these coolers, plastic coolers that could hold maybe 10 liters of liquid, or 4 organs on ice. Oy, oy, oy. So it's my little spiel on Ukraine and their scummy side. I think we're going to see the hryvnia dictate change, and food shortages and food price increases dictate change, and the people are going to march to the streets of Kiev and demand a change of the government. The U.S. actually denies that they have a big role there. Well, if that's the case, why is the security agency, the secret police, why is the building in Kiev showing 2 flags? One Ukraine and one the United States. Now, we're going to see another Maidan revolution in Kiev, but I have no hope. I believe the next administration regime in Kiev is going to be just as ugly as this. Mm-hmm. And they're going to make false promises, and they're going to receive some IMF funding, and it too will be stolen. And then a year or so after that, just like this regime, that'll fall, and then finally we'll have a Russian-backed regime that'll be a little bit more honest. Notice I say a little bit more honest. I'm not going to say Ukraine will ever have an honest government. It's one of the scummiest places on earth.
Yeah, it's in vast resources, but impoverished, and it's terrible.
We better hurry up and make sure that their farmlands do not get taken over by Monsanto seeds. Mm-hmm. I mean, it's easy to reverse the Monsanto seeded lands. You just bring in different seeds. I don't think it alters the soil. It alters the crop output, makes impossible seeds. It makes the plant sterile, mm-hmm. and makes it programmed for viruses. It's a tremendously advanced project, this GMO stuff. I'd like to see that stopped, and I'd also like to see in Ukraine the fracking stopped. We can't contaminate the water system and the food system of Eastern Europe. These nations need to wake up, and the most alert is Hungary. Mm-hmm. I'd like to point out that I'm very, very fortunate, Peter. I've got a client who lives in Kiev suburbs, mm-hmm. and provides information once in a while, and I take notes, and I write down, Joe Blow at AOL.com, and the side I write Kiev suburbs, so I can search that column in Excel and come up with the name. I've got another client whose wife comes from Kiev and makes weekly phone calls to her you know, uncles and friends, aunts, uncles, friends, and maybe parents, if they're alive. I don't know. And I've got another client living in Hungary who has business connections in Ukraine and used to provide me ample information about pardon me, the Gazprom pipelines. Now he's providing me information about Bulgaria and how they blocked the South Stream for Gazprom and how they're likely to change their minds with a little bit of arm twisting from Putin and the Kremlin.
Mm-hmm.
Bulgaria has been a best friend of Russia for 1,000 years.
Mm-hmm.
They're not going to turn west. Not going to happen. They might make a deal where they're paid some money and then they change their mind a year later and they keep the money. That's what I think is going to happen. You've got bribes by Hillary, McCain, and Biden's son all over the place in Eastern Europe.
Yep.
But it didn't work in Hungary, and I'm actually a little bit concerned about the safety of their President Orban in Hungary. So he's been defiant. He did something very clever. This is a side note, but a year ago, he ordered all their banks to convert the mortgages, the home mortgages for all the Hungarian citizens, to convert them out of Swiss francs and into Hungarian, I think they call it forints. The local Hungarian currency called, I think, the forints. What a brilliant move. So, as the Swiss, this is another factor regarding fallout from Switzerland I didn't actually get to in the first question, but all the Eastern European and other European mortgages that are priced in Swiss francs, their loan balances just jumped up 20%.
Yep.
They're not happy.
Why are they doing that? Why is a Polish citizen having a mortgage in U.S. dollar terms, and what's?
Because it's the source of cheap money.
Mm-hmm.
They couldn't get a Polish. I'll give you an example here. One of the tricks in Costa Rica, like my dentist. My dentist said, well, Jim, when I wanted to do an expansion of the business, I didn't want to borrow in Costa Rican colon. I didn't want to pay 20% interest.
Mm-hmm.
So I borrowed in the dollar. I'm paying 9. I'm paying 8. Well, gosh, when they institute 0%, the whole Western world became the banker for cheap mortgages. So when people say that the U.S. is going to, the Fed is going to hike interest rates, they're brain dead. They're not going to wreck all the derivatives that also depend on the 0% free money on the short end to produce artificial long maturity treasury bond demand in the interest rate swap derivatives. This is very complex, but generally there was a trend I noticed in 2004. I used to call it the three-point risk of the Swiss banks in 2004 and 2005, my first 2 years of the hat-trick letter. I said, they've got a lot of loans in Eastern Europe for mortgages that are priced 2% below the standard running interest rate in Europe. So they're very possibly going to default, hurting the Swiss banks. And the Swiss banks have a lot of private hidden account, maybe dirty money, tax evasion, maybe South American heroin money, or maybe even Langley heroin money. I don't know. So that money, as they lose their secret account status, and the account data is shared with the Treasury Department, I suppose Langley accounts would be safe even from that threat, the Swiss banks are going to start losing money. And then the third threat is the Swiss bought a lot of subprime mortgage bonds. So the three losses to the Switzerland hurt them quite a lot. Now they're being drained of a lot of their gold, and they're stealing client gold. I'm hearing that the Gulf Emirate gold in Swiss banks is almost all gone. So do you think the Gulf Emirates, with their $2.2 trillion in sovereign wealth funds dominated by UAE, United Arab Emirates, you think that $2.2 trillion, which is largely in dollar-denominated paper assets, you think it's going to find a way to get back the gold that was stolen in Switzerland? Wow.
Yeah.
Yeah. So we got a lot of demand coming down the pike here.
Yeah.
When people ask me, gee, I can see how gold can get maybe to 7,000 or 8,000, but how do you think it's going to get into the teens, like 13,000 or 15,000 or 17,000 per ounce? I say, well, the remedy for the stolen Swiss bullion bank accounts, the allocated gold accounts that were stolen. A lot of it was Gulf Arab money. We're going to have no trouble getting past 10,000 in gold and no trouble getting past 200 in silver.
Mm-hmm.
I'm actually more optimistic about a 50 and 100-fold rise in the silver price. Maybe not 100, but what would a 100-fold rise be in silver right now? $1,700.
Yeah.
Okay, I have no trouble at all thinking we're going to get to 400. The voice has assured me. And I've got an interesting question that has come up about 3 times just in the last month. Is platinum or palladium a good investment to make?
Mm-hmm.
And I say no. No, it's not a monetary metal.
Mm-hmm.
I'm asking myself a question here, but this is all, you know, in good stead for the webinar. The BRICS nations are going to make a gold and silver backed currency, and Germany's going to back it. So will the Japanese and Koreans, by the way. They're going to move on board. So with all this demand for a BRICS gold central bank, we're going to see an enormous demand, and it's largely going to be handled through Shanghai and maybe through Dubai. I don't know if Dubai is going to...